Well, welcome everybody to our next edition of the Market Pulse podcast. We have a very exciting conversation ahead of us, as a part of the recent Small Business Week and now Small Business Month. We figured we'd do a little bit of a highlight on what's happening in the small business marketplace, a little bit of opportunities, a little bit of threats, see what's going on. And we are extremely fortunate to have a couple of exceptional experts in the space with us today from Fiserv, Darryl Tyndorf, Director of Economic and Analytical Insights, and Mike Spriggs, Head of Consumer Insights. I really appreciate you guys being here. I think we're going to have a really great conversation. Before we jump into it, though, before we jump into that conversation, we do want to throw it over to Moody's Analytics for a quick macroeconomic update, and then we'll get things going.
The US economy is chugging along, but cracks are starting to appear. In the first quarter, real GDP fell 0.3% annually, according to the preliminary estimates. The decline was largely due to a surge in imports from firms who stocked up on inventories in advance of expected tariffs. However, consumption activity, which has been driving the economy forward for several years at this point, slowed and contributed less to growth than in previous quarters. The good news is that the pre-tariff inventory stockpiling that occurred in the first quarter has kept price increases muted so far. Consumer price inflation has been tame and continues to descend towards the Fed's target. However, as firms work through excess inventories and start repurchasing in coming months, prices will start to rise. The April Producer Price Index report also showed some evidence that some firms are eating the cost of higher tariffs. The PPI fell 0.5% on the month, led by a sizable decline in trade services. And now the PPI for trade services is a measure of the change in profit margin wholesalers receive when selling to retailers. So the sharp drop suggests that wholesalers are absorbing tariff costs rather than passing them along to retailers. And given the on again and off again approach to trade policy from the Trump administration, wholesalers may be betting that the current tariff framework will be short lived. Rather than alienating customers and risking market share, firms are hoping that tariffs are reduced further and costs come down. Now, this is a short term relief for consumers, but it cannot be expected to be sustained longer term. Credit stress also appears to be elevating after nearly a year of stability, and much of this is a result of a spike in student loan delinquencies, the rate of which is at an all-time high. With moratoriums on repayments and interest accumulation and reporting delinquent borrowers to credit agencies at this point a thing of the past, late payers, some of whom expected mass loan forgiveness, have been caught flat-footed and will soon face increased financial stress as their credit scores take a hit and authorities garnish their wages and reduce some federal benefits.
Great, thank you. Really appreciate that economic update. So now we get into the fun part of the conversation. As mentioned, we've got some great folks out there today. I'm David Adams. I'm the head of commercial product marketing here at Equifax, and again, our Fiserv experts who are exponentially smarter than I could ever be. So I can't thank you guys enough for being here. If you guys want to just say a quick hi, and we'll get things going.
Sure. I'll start. I'm Mike Spriggs, as you said, head of consumer insights at Fiserv, and we spend our time looking through all of the card and cash and check data to try to understand what consumers are doing on a daily, weekly, monthly, quarterly basis, and try to relate that back to external factors that are happening in the marketplace. That's what Darryl and I do every day. Darryl.
Sure. Thanks, David. It's great to be here. I'm Darryl Tyndorf, Director of Economic and Analytical Insights, working with Mike, as he mentioned. And I try to bring some of the nuance between the economics and the consumer, and kind of, understand that data story and kind of understand where we're going.
There you go. So it's the way I interpret that is you're basically the guy out there predicting everything that's going to happen tomorrow in the marketplace, right?
I don't know about prediction, but I can at least say, hey, this is what I think.
Well, I was kind of hoping you'd say you would. I got to, it's so we got together what 2-3 weeks ago. We got on the Market Pulse webinar. You guys were able to give a nice little, we're able to give a really great update to kind of what's going on in the marketplace.
Sure.
But I'm like, it's been 3 weeks and like the whole world has changed. It seems like uncertainty. I think we know uncertainty is kind of the word of the day. Ask anybody, and everybody's going to like, "Hey, what's going to happen?" I don't know. I'd be interested to get your guys' thoughts. Where do you think we are? Are we coming out of that uncertainty, or is there still so much uncertainty? Is it? I don't know. What do you guys think, Mike, Darryl? Mike, you want to go first?
I think we're in the middle of a global game of hokey pokey. We're in, we're out. What's it going to be? Who's calling the shots here, right? And that breeds uncertainty, right? That's the whole anxiety of that game. Is like, oh, what am I going to do? What am I going to do? And I don't know. I mean, every week is a different news cycle about deals and tariffs. Are they on? Are they at 140%? Or are they at 30%? Just a lot of uncertainty. You asked, is that going to continue? For the foreseeable future, it seems like. I can tell you from what we've been examining with consumer spending, once this cycle of uncertainty started, consumers seemed to try to take control of their own destiny and made purchases on large scale or large ticket items. And then that seemed to kind of back off. And now as we're through April and into May, we're seeing a decided downshift in discretionary spend, which seems to kind of align with people saying, okay, I don't know what's going to happen, so I'm just going to kind of hold on to my money until things become more clear. That's what we see in the data, the signal that we're picking up.
Yeah, I think a lot of people are echoing that a little bit. It's when you're, I don't know, is paralysis, is that the right word, Darryl? Like, are people paralyzed? And I don't know.
Yeah, and I don't know about paralyzed. I think, I said this at the time of the election, which was I thought that it was going to be very uncertain times, right? And I think that lags were going to be also the other statement that was going to be used. And what I mean by the lags is that we just don't know when we were going to feel any of these pressures because of the uncertainty, right? So, we saw Q1 GDP contract. The argument has always, started to come around like, that what's being forced was core GDP. I would argue that, core GDP is not entirely the most accurate picture. There's, consumption of demand. And when we look at these GDP numbers, really what I see is that it reflected the consumer wanting the cheaper prices because it was focused on already existing inventories, not the production of inventories the new production of inventories. So with that, ultimately, hey, those goods are at cheaper prices. And so because of that, we didn't see the price increases, right, with CPI that was released, and what I mean by not seeing those increases is that ultimately it eased, was still high, and everybody expected CPI to come in hot, and really, inventories were stocked up on cheaper prices. There wasn't an incentive to push those on yet to consumers because nobody knew what was going to happen. And so we don't know it's going to hit, right? Tariffs are higher than they have been. We are going to see increases in prices. It's just a matter of when. And that's why I say that uncertainty in the lag component really, in my opinion, is we don't know. And so consumers, as Mike said, right, we saw them kind of pull back. MRTS came out today, kind of, echoing what we've been saying, which is, consumers slowed in April. And that slowing, I would say is representative of the pressures that households are feeling and that uncertainty pressure.
Yeah. I could totally see that. We saw a similar, what you just described, we saw a similar thing on our side. Some of our economists, some of our analysts were looking at it. Like in March, there was this like big bump in some spending and some lending. And we're like, well, that's really strange. Well, everybody's trying to get ahead of the tariffs.
Right.
And then everything kind of stopped there for a second the next month, where it's like, okay, nobody's doing anything. So like it kind of throws that CPI, off a little bit. And
Yeah.
go ahead.
It's all unprecedented, right? And people are trying to respond in real time to whatever they think is in their best interest, right? And so just like what you guys saw, we saw this off-cycle spin, and it was really interesting. We have the good fortune of being able to kind of decompose small business and big box and total market. And so what we saw in our numbers was across the small business, electronics retailers and furniture retailers, we saw this early bump, like late February, early March. We saw that bump. And then I guess once the news cycle kind of substantiated the fact that, yeah, these tariffs are inevitable, they're coming, then we saw the big box retailers and another off-cycle jump in volume across those same large ticket items, and goods, across goods. And so now all of that is kind of really settled out, right? Because now we're into May. April was, like we've been saying, slowed down. It was a little bit lackluster for a lot of categories. Some of the heavy discretionary spend areas like travel, way down. Except for, here's an interesting thing, we see a lot more activity now in public transportation. So, what that says to me is this return to work environment that we're in is pretty much, it's now in play. I think we're headed toward kind of just a really conservative time in terms of how consumers are going to spend over the foreseeable future.
All this stuff seems so intertwined to me, because it's, there was conversations about fear and uncertainty, and that was growing, but like consumer spending was still propping up a lot of small businesses. And now the consumers, there's the deposits, we're seeing deposits grow. People are holding their money back. I don't know. I guess I'm trying to figure out, it's like, what kind of pulls us out of this pause? Do consumers start spending more because they're okay and they're feeling relaxed? Or is it like the tariff thing gets sorted out and all of that? I don't know.
Well, I think what you end up seeing is, again, with the uncertainty, we don't know what's going to happen, right? And I think, I think we could end up having this up and down pattern because the headline comes in as inflation eased, right? So if inflation eased, you could see consumers, because ultimately I haven't looked at the employment numbers, claims, but job numbers came out that before they were stable. Incomes are still stable, but it was the uncertainty, what to do, and tariffs were being implemented at the beginning of April, right? And so now we're assuming prices go up, and so we see the headline inflation ease, and so that might bring some consumers out to spend, especially those in the income brackets that can spend. Right. And so we could see that spending, but then, as we said, prices will increase. That all of a sudden we could then see another pullback because prices increase, right? This is that hokey pokey nature that we're kind of alluding to here, which could be, hey, we're in, we're out, we're in, we're out. And it's because of that level of uncertainty, right? Households and businesses do better with certainty. They can plan ahead. And so, if prices are in line with something that they need, right? We saw the change from discretionary to essential, and they need it, they will buy it.
Yeah. I swear, by the way, we're either going to have to create a visual for the hokey pokey or just layer in the music on top as our background.
Yeah.
Something like that. It's, Darryl, I forget who said it. There was a really famous economist that said this. It was 10, 20, 30 years ago, whatever it was, said businesses, it doesn't matter who's in office politically, it doesn't matter what's happening in the marketplace, up or down, left and right, it doesn't really matter. As long as there's some level of confidence, I think that's the key word. As long as there's some level of confidence that they know what's going on or what could be coming. Hey, we think that this is going to happen. We're fairly confident. So even if they think it's going to go down, okay, businesses can respond to that. Consumers can respond to that. If the other thing, so it's like maybe that's it. Maybe it's the shift from uncertainty to confidence that we need, and who knows what it is that's going to do that.
Well,
yes.
Go ahead, Mike.
One thing I was going to say is we just got to be careful. I hope us as consumers, we're all consumers, right? I hope as we listen to the news that comes out, we talk about, hey, inflation ticked down from 2.4 to 2.3. That's great. Okay, does that give me a little bit more confidence to spend? You just got to be careful, right? Because that's the top line number. And what we've been seeing is, when you start to pull that basket apart, we still see some of the essential spend, things that you gotta spend on, are still creeping up. Housing and utilities and things like that. So that's still creeping up. The other thing is, we've been saying for a long time now, certainly since the start of the year, we've been talking about consumer resiliency. It's great. But when you look at how consumers are spending, there's a lot of credit being used. There's a hard stop with that at some point, right? And so I just have a legitimate worry that, at some point, the ability to spend is going to dry up because, the credit limits are going to get maxed out and repayments are not probably going to come in at the same level that they are now. That's what I worry.
Well, it'd be interesting. Well, we hear it with small businesses. Access to credit is always the biggest driver, and when the funds dry up, again, that's when things go sideways. The question is, when is that going to happen? If it's going to happen, knock on wood. I guess, the jobs report, I guess that's the nice part is, as long as people are gainfully employed, like, to me, that's personally, I look at that and I'm going, look, as long as I got a job, as long as other people have a job, we can all pay our bills, we can afford to feed our families and things like that, the bare essentials, we can dial things back. Like you mentioned the travel, a good example. Although, funny enough, in one of our small business lending index, one of the things that we've seen recently is we've actually seen entertainment and retail and some of those nice to have components. We've actually seen an increase in lending. Although you're making me wonder, it's like, has the increase in lending, is it a result of needing the money and the capital because of the lack of spending? Or is it money for investment?
Yeah, to stay afloat or to invest and expand.
Yeah, exactly right.
Yeah. So the mix, as we examine, we got a segment that we call leisure within our spend trend product.
Okay.
And so it's kind of a hodgepodge of different stuff. But what we've been noticing is that some of the lower cost, family oriented things, destinations within leisure are picking up a little momentum. Movie theater, box office, family entertainment centers, where you can go and the kids can play laser tag or bowl or, and stuff like that, right? We've seen an uptick in that. So it's not like consumers are just backing away from discretionary spend totally, but just like we've seen in restaurants, they're trying to figure out, okay, of all the menu options that I have available to me, how can I stretch my dollars, maximize the value for what I have to spend, right? So we see that in leisure. We certainly see that in restaurants, and Darryl has done quite an in-depth analysis on the impact of inflation in restaurants. Tariffs and inflation are two sides of the same coin, right? So we've been looking at that as well.
Restaurants have a hard time passing on higher prices to consumers right now, right? They want to be competitive. Mike, you were just talking about, the cup of coffee example, right? Like, I mean, coffee beans have soared, right, due to that price point. And, even though when we look at food inflation, that has eased. And so, currently it's still, relatively cheaper and easier to go to a grocery store where, obviously they're insulated a little bit through the elasticity of prices and so forth. And so what ends up happening is there are also substitutes, right? If it's too expensive, well, I can find another substitute, right? And so there's that. Whereas you go to a restaurant, there's not necessarily a substitute. And so what we've seen is, first off, the trough of inflation for restaurants, went down to its bottom in January. It started to pick up again. And so we've seen that ultimately consumers have changed their pattern. First, decreasing at fine dining, which you would expect, right? Consumer behavior. Hey, where am I gonna end up pulling back first? And it's the most expensive pieces that I don't necessarily need. Then all other areas started to see that slowing effect. And the one that is, still seeing growth, it's slower than it was, but seeing growth, is the quick service restaurants, right? Because now I can stretch my dollar. And I would also make the argument, right? Quick service restaurants are not the all-encompassing bad eating out that I think we associate them with, right? They have now adjusted, right? They've improved their menus, healthy eating. Kellogg's came out and said that they're seeing an adjustment in their cereal aspect, right? That consumers are not in demand of that. They want healthier options. And so, QSRs did make that leap earlier. And so, they can get healthier foods at a QSR. And so, I just want to make sure that we're not pigeonholing that QSR is all bad when it's not all bad. And so there's some aspect of stretching your dollar, right, that people are doing at restaurants. And that's what we're seeing. Inflation did take a big chunk of it, right? Restaurants improved after the pandemic. But now the growth levels are below pandemic levels. That's the inflationary impact that has happened with restaurants. And so, the tariff piece, could impact even more so.
I love what you said there in terms of it's not all bad. I think there's another aspect too. I'd be interested to get your guys' opinion on this. Is some of the stuff that we're seeing here, whether it's restaurants, either lack of stuff that people are finding, or Mike, people looking for people to extend their dollar in other places. I think it's creating some opportunity, which I'll get to it, which is side gigs, side hustles, and things like that. We're seeing on our side, we're adding more than 400,000 new businesses to our databases a month, and businesses that we're looking at, credit files and things like that, which is exponentially higher than what we saw, 3, 4, 5 years ago. But what we're finding is a lot of those business are side hustles where people are trying to make some extra money. And I'm wondering if it's just a combination of, are people opening up a side hustle because they need to or because they want to? And are people opening up side hustles and do these things because, like, there's this perception, Darryl, that maybe, oh, this place is not good for me. I'm going to do something myself, and I'm going to try and bring other people into it. I'm going to try and find opportunity. Just grow.
I think it's both and. I don't think it's either or. I think it's both and. I think history has shown us that any economic disruption creates opportunity, right? And so for somebody with an entrepreneurial spirit, they see an opportunity to serve a newly created demand, or some twist or change on existing demands. They feel that they can solve that, right? And so it creates opportunity, and they jump in. I think that that's definitely true on small scale, small business, gig type work, and large businesses as well, right? We saw that with restaurants during COVID. The way that they changed their business model to start to serve a population that wasn't going to sit down and eat, and make it profitable. we kind of witnessed that real time as we were, as we continue to process transactions for, all sizes of business. So that's true. At the same time, things are getting more expensive. Money's getting tighter. Housing is going up. Utilities are going up. Insurance is going up. All of these essential spend things, reducing the amount of discretionary dollars, but you still want to enjoy your life. You still have a family. You still got to buy shoes and, pay tuitions and things like that. So I think it's both and satisfying, taking advantage of a disruption in the status quo, but then also just trying to stay afloat.
Well, and I think too, I think, and I don't know this for certain, and I think it'd be interesting to research and find out, because if I recall correctly, I thought, right, during COVID and during some of our downtimes, there have been increases in LLC development. And it would be very interesting to see if, or even, survey oriented, however the research would be conducted, which is, is it a matter of developing that LLC as a buffer if something does happen, right? Is it an LLC to bring in, additional revenue to continue on, that if, again, hedging your risk, right? And sitting there saying, listen, I don't know what's going to happen, right? If a business can do better without me, they will. So I might as well have something on my side that can end up maintaining at least some sort of income or some sort of benefit to myself. So I think, maybe that's one thing that, regarding the increases in those LLCs. And I think, to the point of what you said regarding restaurants and adapting, right? Every industry during an uncertain time, we're talking tariffs, we're talking COVID, it's all about the adapting piece, right? In some regards, this is what the argument is about small business, right? Small businesses don't have the underlying red tape. They can adapt quicker to nuances.
Yes.
And so if, COVID hits, for example, right? How do I adapt? I increase technology. I increase getting my good or service to that individual in a safe manner. During high price tariffs, right? What do? I stock up on my inventory. I find another, supplier from a lower tariff place. Or if I'm a restaurant, I find another means for that product in a different sort of food, or in a different sort of, I find some other substitute or utilize it in a different mechanism. So I think, the thing about business, especially small businesses, is their ability to adapt. And I think that kind of goes hand in hand with that thought process of, hey, consumers aren't any different, so people aren't any different, which is, hey, there's uncertainty. Maybe me developing an LLC is a smart move, that somebody would still pay me to do these things if they're not going to pay a larger term aspect of my employment, that it could be contractual.
Oh my, I think you are 100% spot on that one, Darryl. It went from, so 2019, I think the number was like 3.5 million small business applications were filed. 2020, COVID hit. I think the number was in the 4 million range, or maybe that was 2021. But 2021, it was in the 4s and the 5s. It stayed in the 5 million new business application ranges the last several years. And the thing that I think is so interesting about it is a couple things. One is, I think there was a perception that, to start a small business, I need thousands of dollars and I need all this stuff. Now it's like for a couple $100, you can go get an LLC set up and a license. And maybe to use a funny line from a movie, the difference between ordinary and extraordinary is that little bit extra, in our lives, ordinary versus extraordinary. Like,
right.
My impression is people are like, that little bit extra is, okay, I can now take my family out to dinner that I want to do. Or like you said, Mike, it's look, if something does happen, or like this unexpected expense comes up, I'm not going, do I buy food at the grocery store this week, or do I pay this bill because I have to?
Yeah.
It's like, I think people are just finding it as a way to just soften or just create a level of comfort,
Yeah.
confidence. Hey, confidence that I can get through whatever's coming my way. Like no truer words, I think, for what you said there, Darryl. 100% spot on. So, but still, so much uncertainty. I think everybody's a little bit, okay, great. I'm going to stockpile some cash. I'm spending a little bit too much. I don't know. Can we just fast forward 3 months or look into our crystal balls and figure it out? Like that'd be easier, wouldn't it?
Yeah, I just want to be done with this and just move on to whatever it's going to be. I just want to get there.
Yeah, exactly. Let's just get there so that we know what to do. And
want to get there, man.
Is the apocalypse upon us, or is it all rainbows and unicorns? I don't know.
Right.
No. Anyways, I know we're getting close to time. I could talk to you guys for hours. Like I love these kinds of conversations. It's such good things. I don't know. Any last thoughts? Any predictions? I know it's a scary thing. Where are we going to be in 6 months? We going to be up? We going to be down? We going to be figuring it all out?
Darryl, you want to go first or what?
Yeah, I mean, I can. I think we're still going to be uncertain. I don't know that we're going to know when things are going to hit. And you know what? It could be a slow process, right? It could be that the function of passing on prices to consumers ends up slower. So we see a slower uptick every month in inflation, right? And a slower pace of decline, in the Fiserv Small Business Index and MRTS and PCE. What we're definitely going to see is we are going to see rising prices. It's going to be how adaptable businesses, and especially small businesses and consumers, are to that. And I think a lot of that will depend on watching the jobs numbers and income numbers, because I think that's going to be our gauge about when consumers really decide to start to pull back.
Yeah.
Darryl?
Mike?
I think I'll just speak from the consumer aspect of this, right? So consumers are going to continue to be cautious. And I've got an anecdote hot off the presses. We just did a review of Mother's Day activity. And I hate to say, Mom, we're on a budget this year. So we didn't as consumers, we collectively didn't go all in to spoil Mom with gifts and all kinds of experiences like we've done even last year and years past. So I think that speaks directly to the discretionary spend pullback, right? Summer's coming. We usually see certain industries pop with summer. Travel is, waiting on summer with bated breath, but like we just been talking about, travel has slowed down. So does that create an opportunity for those operators in our leisure segment to kind of pick up those dollars that are not being spent in big travel events and doing more staycation stuff where, consumers can figure out how to stretch their dollars, right? And local leisure activity providers taking advantage of that. So we may be on the cusp of another shift, another realignment as businesses that are aligned to kind of fill those new consumer needs. As they align and figure out how to do that, we may see this shift, and then this will become our new norm. Who knows?
Mike, as you said that, I was thinking, what we should do is we should look at our findings and compare it with the lipstick index, right? And kind of see, kind of what ends up happening there. That'd be interesting to see, given, the fact that, the belief that, obviously it was coined by Leonard Lauder, but that as the economy weakens, consumers shift, towards more affordable luxury items like lipsticks and so forth, and cutting back on their larger discretionary. So it'd be interesting to see.
Thank you for the time. I really appreciate it. This is really enjoyed the conversation. Maybe we can do it again in a couple, 3 months or 6 months or whatever that might be when we get through some of this stuff and we figure it out. But Darryl, Mike, again, I really appreciate your time and thanks for a good conversation.
Thanks, David.
Thanks,
Appreciate
David.
it.
Great.